Hello, everyone. Welcome, students. Welcome to our program for tonight. It's great seeing you all. We have two esteemed guests to present on our wonderful topic. My name is Raj Mahale. I'm the chair for the Center for Global Business. I'm an attorney in New York City, and I focus my practice on offshore and onshore funds and a global funds practice. Today is 9/11, and if you hadn't had a chance, and if you do get a chance, please do close your eyes and send your thoughts and well wishes to the victims and their families of 9/11. They will always be remembered in our hearts. I am going to hopefully have some time for a Q&A at the end, maybe 10-15 minutes after the presentation, so stay tuned. And it would be great if we can have a lively discussion. I am going to introduce two of these speakers, Lucien Chautier and Edward Ho. And after I do so, I have a list of questions that I formulated that they don't know about. I'm going to give them 2 minutes to speak on each of those questions. And if they run over, I'm going to turn off their microphones. And if I don't like their answer, I'm going to send a shocking buzzer. It's going to shock them. There's a shocker in the receipts. So, all kidding aside, let's commence. Maybe one day I'll be a moderator for a panel, for a presidential panel.
Are we going to be fact checked, Raj? Are you going to fact check us, or?
Oh no, too much brain drain for that. No, you can say whatever you want. So first, our guest is Lucien Chautier. He's a seasoned executive and board member at the Center for Global Business with over 30 years of experience throughout the Americas and Europe. He focuses on energy infrastructure projects with the world's largest global corporations in the field. He has a deep knowledge of the emerging markets with executive experience in infrastructure, transportation, logistics, roads, public transit, ports, energy generation, transmission and distribution, digital infra, as well as industrial and manufacturing. He has an extensive M&A track record. He has a passion for new markets, growing businesses and developing cross-border partnerships. He holds a Bachelor of Commerce and Finance and Economics from McGill University and an MBA from the great University of Texas in international business concentration, and also he has an advanced placement degree from the Wharton School. The other gentleman, Mr. Edward Ho, who is with ARENA, and I'm sorry, Lucien is with North South Energy. Edward Ho is with ARENA Financial Services. Ed has over 20 years of experience in business development, capital raising, and product development in the asset management industry. He's a managing director at ARENA Investors. It's a global investment firm with over 3.2 billion assets under management. He leveraged his skills in strategic analysis, investments, and asset management to identify and execute new business opportunities, expands the firm's client base. Previously, he was a partner at Mercury Capital Advisors, where he led the U.S. distribution and capital raising efforts for alternative investment products, and was a managing director at Fundstrat Capital Advisors, where he headed the product development of proprietary equity indices and buy-side partnerships. He holds a Series 7, 66, and a 24 that was issued by FINRA. He holds a BS in computer science from Columbia University. So without further ado, please welcome these two esteemed guests of mine. Give them a good sitting, just a round of ovation. We will commence our discussion. Welcome.
Thank you. You're right.
So the first question, gentlemen, is to Lucien. Lucien, you have a lot of cross-border experience, and how has the cross-border investment flows evolved over time? What are the drivers? What has been your experience dealing with the infrastructure investments, especially in Latin America, since you have a lot of focus there?
Yeah, call me LJ, by the way, Raj.
Wonderful.
Easier. So yeah, I mean, it's evolved a lot. I mean, I'm Canadian. I started my career working with Canadian companies back in the early 90s, late 80s, early 90s. And back then, I mean, the focus was really on finding opportunities where companies and investors from North America could invest in emerging countries. And there weren't that many emerging countries that were that could receive those investments because of the regulatory environment, political environment, security environment. So when North American Free Trade Agreement opened in the early 90s, Mexico became a big thing. So you're talking, you know, I'm referring here to 1993, 94, 95. So there was a lot of investments from the north going to the south, and that was driven by two things essentially. Number one, in North America, and I'm including Western Europe as well, but my focus was from North America. You had a high rate of savings in the economy because of aging population. So the retirement funds were just swelling, and there was plenty of money to invest. And investors were looking for higher returns and new opportunities, new frontiers. And on the other hand, you had the South, where you had a massive infrastructure gap and where you had needs for investment, and you had much younger population with larger families, which required a lot of money to finance that growth. And you didn't have that capital because remember that in Latin America, for example, the pension system wasn't implemented until the late 90s, early 2000. And well, it started in Chile, and then you have Mexico, then Colombia, but really, and Peru, but really that took, you know, that was not until the early 2000s. So you needed the money from North American investors, companies to fuel the growth of Latin America, which was my focus originally. That has helped to really build the infrastructure, and not only the infrastructure in terms of, you know, roads and energy and such, but also the industries. You know, for example, in Mexico, you didn't have an airspace industry until a Canadian company, Bombardier, with whom I was working at the beginning, started creating an industrial cluster north of Mexico City in Querétaro. So that's when the airspace industry became important in Mexico. It was all driven by North American looking for opportunities for lower cost or investment in Latin America or in emerging countries.
Thank you.
Yeah, sorry.
Thank you, LJ. And just a quick question, since I was an IB student at UT back in the day. You know, remember, since you mentioned Mexico, the melodores, the investments that were, you know, in your quick perspective, do you think that worked? Did it fail? I just want to, you know, maybe just a quick answer and your thoughts on that.
Interesting, because that really that was also a big driver of a U.S. company looking for lower costs, and that ended really at the end of the late 90s when industries moved to China first, and then Southeast Asia in general to achieve that same goal they were achieving in Mexico initially. And what happened then is an evolution where the economies became much more value-added oriented. It was not just lower cost. That didn't work anymore because the cost was much higher than other places, such as first China and then other countries in Southeast Asia.
Right.
And so that drove the evolution as well. And then it became different. So at that point, you had a different environment completely. And I'm talking about the mid-2000s when things really changed.
Right. Thank you, LJ. Ed, thank you for joining us. So
Pleasure.
You have a lot of experience in private markets and investing over the last 25 or 30 years, particularly in globalization of those markets. Can you explain to us about the evolution of these private markets over the last 25, 30 years, please?
Yeah, to set the table, when I got into finance in the late 80s, early 90s, the US was the dominant market and dominant economy in the world, unrivaled in terms of market capitalization, in terms of flows of funds. Today, still the largest market, but roughly accounts for 40% of market capitalization worldwide, and increasingly you're seeing growth outside the US. What have been the important milestones over the past 30 or 40 years to create growth outside the US? I would say first and foremost, the fall of communism. That's a loose way of describing it. As we know, the People's Republic of China still is a communist regime, but they've adopted capitalist policies. So the ability of capital to flow around the world has certainly become much freer than it was when I started in this industry in the late 80s. I think the other massive force driving globalization has been the volatility of the US dollar. And as we know, the US government has changed its policy around the dollar. The Federal Reserve has had a lot of influence around the value of the dollar relative to currencies. But when the US dollar is strong, investors, typically North American investors, want to hold US dollars. And when the dollar weakens, it makes a lot of sense to invest in other parts of the world: Europe, Asia, Japan, Australia, South America. So the volatility in global currencies has certainly influenced the globalization. And the last, I'll make a little bit of a joke, but it's very serious. My teenage son asked me the other day a very big question. He said, what drives the growth in equities on a global basis? And I said, fundamentally, it's about having babies. And that is, when economies are growing, when populations are growing, that is to say the GDP of those respective parts of the world are going to grow, right? And you can see that in various parts of the world. So as population grows, say in Africa, or as population grows in Southeast Asia, keep your eyes out for what happens in terms of globalization and capital flows. Very important for us all to recognize that the world is changing and shifting dramatically before our eyes, and that has a lot to do with government policy, that has a lot to do with population growth, and that has a lot to do with innovation and things along the lines of that area.
Thank you, Ed. You mentioned, China is a communist regime, but they've embraced so-called capitalism for inflows of capital, outflow of capital. But do you think the tariffs hurt this aspect of outflow of capital into China since we've increased those tariffs to China?
Yeah, so two things on that. Tariffs are an inefficient way to create global balances. And I've learned that both in terms of my studies back in Economics 101. I'm hopeful that the University of Texas teaches from the same textbook that I had back in the day. But furthermore, tariffs don't necessarily provide the desired effect. And I was at a recent conference where the chairperson of Templeton and one of the founding members of that family was in China visiting large producers of consumer goods, whether it be electronics or other durable goods. And the Chinese factory owners are much smarter than we give them credit. They were assembling the parts in China and then shipping them off to Vietnam or Cambodia and be stamped made in those respective countries.
Right.
It is an inefficient way to create global balances. Ultimately, as we all know, competition is what creates balances. I'm a big believer in that, but we're in a political environment. We're pointing the finger at various countries for the problems we have domestically is much more convenient, resulting in these tariffs. Ultimately, if a tariff is imposed, you and I are going to have to pay for it.
That's right.
So
thank you for that, Ed. Going back, LJ, we're talking about investments into Latin America. So I am an investor. I want to invest in Latin America. I know it's getting more and more complex, especially the regulatory environments in Latin America, to unlock these investment opportunities. What do you think are the key risks and rewards of aligning with local regulators and their frameworks?
Sure. But before I answer that, I just want to follow on what Ed was saying, that the effect of these policies have had on the investment is really big. For example, between 95 and 2010, investments of US and Canadian infrastructure investment was $15 to $20 billion a year in Latin America. it went down to 5 billion a year by 2020. In contrast, China went from 1 billion in 2005 to 25 billion in 2020. So this is the effect, they're always, and as you say, put your stamp and then you sell it into the market through, under the auspices of a free trade agreement. So to your question, Raj, in terms of the regulatory environment, this is a major issue when you invest anywhere. And there is a clear, how should I say that? It's a big, either it attracts investment or it deters investment. And we can see this operating in real time right now. We see those countries, to take the example of Latin America, which is the area that I know the best. You had in Mexico, for example, since the late 80s up until 6-7 years ago, you had a very open environment where investors could come. You did have some issue with rule of law. You did have some issues with enforcement, but you can always do contracts under New York law, and you could do some arbitration. There was a process that was that allowed investors to comfortably look at long-term investment opportunities. This has shifted somewhat, and right now there's a lot going on in Mexico with the approval of the reform of the judicial system. Not to get into the details of this, I would say that right now a lot of investments are waiting to see what's going to happen. So it drives a lot. And same thing goes for certain countries in Central America, Colombia, Peru, even Chile, which has historically been the most stable and the country that was most friendly for investors. Now this is coming to be questioned. So, is there an advantage of aligning regulatory frameworks? I wouldn't say so, because each country is different. Each country has their own culture, their own history, and it's important to maintain that distinction that each country has. I think that's really important. Having said that, I think that there is a need for an international framework for sure that will allow investors to be confident. And when they go into a country, those countries who adhere to these principles will abide by them and won't be going, that the investors will not be caught in a really bad situation.
So LJ, real quick. I've structured deals in the Middle East and South Asia and China, et cetera. And, throughout the years, the Middle East was easier to structure investments in than China, now India. Are there certain countries in Latin America that you think are the top three that are open for business?
Yeah, right now it's hard to come to. It's really hard to think of countries that are sizable in terms of the investment opportunities and that provide a stable regulatory framework, because everything is a bit under attack right now. But I would say Chile is still a good place. However, again, this is being this is fading away a little bit right now. But you have certain countries, for example, I would say Guatemala, which is totally under the radar in general. People don't talk much about Guatemala, but it's a great country, at least for the financial industry and energy. It's a very stable framework, stable currency. The downside is that the size of the investment opportunities tend to be small, and that deters some of the largest investors who will look to other geographies, say in Asia or elsewhere, where they could deploy more money because it becomes inefficient to deploy small amounts of money. In general, I would say that the region has deteriorated in terms of the rule of law and the overall environment for investors.
Raj, can I chime in here for a second?
Yeah, please, Ed.
So there are, I think, 3 or 4 fundamental regulatory regimes that are important for global capital flows. One of those would be having a uniform commercial code, right? And the countries that abide by that have rule of law over contract, attract capital. Most notably the United States, Canada, Japan, Australia, those types of countries have great universal commercial code laws and regulations and enforce them. The second is bankruptcy. That is, if I lend you money, right, or if I invest with you and you are out of business or you're insolvent, I want the ability to get my money out. And you have to have bankruptcy provisions that allow for investors, lenders to be able to resolve their rights and obligations. The other is shareholders' rights, governance, and accounting, right? Countries that have great regulatory umbrellas and regimes give investors the confidence that their capital is A, protected in terms of the truthfulness or the transparency of accounting statements, and B, that shareholders' rights are rigorously abided by boards of directors and so forth. So those are very important. And as the world opens up, as students, as ultimately, professionals in those environments, keep that in mind. Globalization just doesn't happen because somebody says, oh, it's a good place to invest. These types of regulatory regimes are absolutely critical to attracting capital.
Thank you. Yeah, go ahead, please.
Yeah, I was going to say, I would add two things to your list. Just absolutely correct. Spot on. I would add two things. Number one, independence of the central bank.
Yes.
Yeah.
And number two, independence of the regulatory agencies, which is something that Mexico, for example, was implemented. Chile did that very long ago, and that really helped attract investment.
No, thank you for that, LJ, and thank you, Ed. That's kind of like the world that I live in, as you know. So, sort of dovetailing, Ed, to this, what, and you've addressed some of this already, but what are some of the key considerations and challenges for investors in the private markets outside of the U.S.? And you eloquently stated a few of them. Is there anything above and beyond to add to that you think of?
Yeah, I think first and foremost, you want to invest, whether it's privately or publicly, but since we're focused on private, you want to invest in areas of the world where markets are open, right? Where governments are friendly to outside capital and where there is growth. So I'll give you a couple of compares and contrast. China, for the better part of this century, was the place to be until recently. It's still a very attractive part of the world, but the government is becoming less friendly to outside capital. That's a red flag, right? Growth is slowing, and a number of red flags are being raised in China. The population is slowing or declining, right? Banks are having issues. They were over-levered, right? And so things can change pretty dramatically. Compare that to Africa, which is the fastest growing continent in the world. However, many of the countries in Africa are not politically stable. So you have to weigh these things in the balance. If you look at some of the purveyors of private capital, they are going to Africa because of these magnificent opportunities driven by the growth in population, driven by the innovations that are required to grow these economies, cell phone technology, etc. It's like when Christopher Columbus was asked to sail to the Americas. He had a few wooden boats and some brave young sailors to go with him, but it was pretty dangerous to do that. Now he came back and the world changed for the better part of 400 or 500 years based on those discoveries. I think something similar is transforming the world of private capital as we speak outside the US. I just give those by way of example.
Thank you for that, Ed. Moving on, so there's always a cross-cultural component, right, to LJ? What roles do these cross-cultural expertise play in bridging the gap between North-South and South-North investments? Can you share some examples about cultural sensitivities, or what's helped you or hindered you in your deal making in Latin America specifically?
Sure. This is key. It's absolutely essential to understand the business culture in which you are evaluating an opportunity. In general, I would recommend having a local partner to navigate through the specifics of that environment where you're looking at an investment opportunity. And I'm saying that I lived for 16 years in Mexico. I don't pretend to understand Mexico yet, and I'm not sure I will ever understand it fully because it's so complex, and you need to have local skin in the game, if you like. And there was a time where companies would send expats, right? That was the thing. You would send a bunch of expats. You had, it was a lot of fun because you had a lot of, people to be friends with. But now it has shifted towards having locals managing the situations that foreign investors look at. So I would say it's critical. Language skills is very important. Not necessarily essential, depending on how involved the executive will be in the management going forward, but it's really important. But it goes beyond language. It's also about the understanding the idiosyncrasies, understanding the assumptions. Does
mannerisms.
Yes, does no mean really no, and these kind of things, right? And I remember, situations where, we would understand something from our counterpart, and finally there was something completely different. Because over the phone they would not tell me their exact position. We would have to go there physically, fly there and be in front of them for them to tell us exactly what the situation was. So this is, we have a culture in the Anglosphere, if you like, where we trust each other in general, right? There's this sort of environment where if you have a call with someone, you trust that will, that everybody will make good on what they say. In more Latin cultures, you need to develop the relationship. That's critical. And that goes through spending a lot of time. In many cases, it goes through spending not only time with the person, but also with family and so on. So depending on the country where you operate, I think it's critical to have local knowledge, a local partner, and to spend a lot of time studying before you even consider making an investment.
These are excellent points, LJ. I think I lost half my hair not knowing these cultural when I first started doing this. So yes, I learned a lot, trust me. Thank you for that. So Ed, going back to you on these private markets outside of the US, where are these private markets? Where are these opportunities to invest in? Where are these job opportunities that you're seeing? I mean, I think we are entering a brave new world, in my opinion.
We are, and I'll do a quick span of the globe and highlight a few examples. The venture capital community in Asia, driven largely by China and India, is expected to grow larger than that of the US in the next 20 years, which is unfathomable if you turn the clock back 25 years. The dominance of Silicon Valley, all the names that just roll off your tongue, whether it's NVIDIA, Apple, Amazon, these behemoths that now dominate on a global level were driven out of Silicon Valley venture capital investments. But the big action is going to be in the most populous nations in those respective economies, namely India and China, and all of the brain power and technological innovation going on there is attracting capital. You will continue to see that develop and promoted, given the size of those respective populations and economies, and given the amount of technical innovation, whether it's in chip manufacturing, software, EVs, robotics, you name it, artificial intelligence, the one that I've left off. You're going to see a tremendous amount of opportunity. You're going to see a tremendous amount of competition with our home country, the United States, coming from those parts of the world. I touched on Africa, but I'll give you a story on a deal that I was working on about 3 or 4 years ago. And it highlighted a young female student. I think she ultimately went on to get her PhD out of one of the Oxford or Cambridge doctorate programs. And 6 years prior to that, she was living in an African village doing her daily activities on this device. She would buy her provisions for her family. She would study. She would monitor everything going on in her life, her calendar. And the reason that was so important was there was no infrastructure. She didn't have a school where she lived in her village. She did not have a supermarket. She did not have a hospital. We take it for granted, all the wonderful things that living in the West affords us as human beings, but she was able to do all of that largely on the backs of a mobile device. And if you've looked at what's happened in mobile technology in Africa, ranging from cell towers to servers to the infrastructure being built, it is exploding given what's going on in Africa. Now in Europe, I'll move from Asia to Africa to Europe. Europe is a mature economy. Europe is a slow growth economy. But guess what? Westerners still love drinking French wine and visiting lovely Italian cities, and resorts and hospitality in those parts of the world have boomed, largely on the backs of foreign travel being so invigorated post-COVID. The problem was a lot of these European resorts, hotels, and so forth were funded during the financial crisis. And these loans sat on the books of European banks, not being marked down to the point where, these were not being paid during COVID. Well, post-COVID, a lot of the banks are now releasing these assets off their balance sheet because they need to clean up their balance sheet. And we are seeing activity being able to get into some of these European hospitality assets at very attractive prices. So where do you go in the world? There's opportunity, and globalization still is going on. It's going to be a very exciting period for the next 15, 20 years for you guys coming out of.
Yeah, that's right. It's promising for all these students. Absolutely. So it's not gloom and doom. It's just growing. The opportunities are growing. So LJ, how do we, the international investors, balance the geopolitical complexities? That's another thing that you learn, right, in these courses. Not just the cultural aspect, but geopolitics is key. And so in the changing political climates, trade policies with Latin America, and the growing demand for sustainable infrastructure, what strategies do you think mitigate some of these risks? Can you elaborate on that?
Well, first of all, I think that the flow of investment, and building on Ed's comment, which are spot on again, it's the demographic situation of each region is a key driver of what are the flows. So, for example, it used to be before that it was North investing in the South, and now you see situations where the South is investing in the North. Why? Because the population has aged, and therefore there's more savings in the economy, and investors in emerging markets have become more sophisticated, and they're looking for diversification away, to your point, of geopolitics. A lot of the major driving force of investors from emerging economies investing in developed markets is the geopolitical situation in their home countries. So they're looking for diversification. Smaller economies generally have, and emerging economies generally have, a big concentration of wealth within a few families. And therefore, they realize that there's a major risk that if the country, to your point about the geopolitical situation, if their country for some reason will shift, towards a less friendly environment for them, well, guess what? They have 80% of their asset in that country that could be stranded. So they're looking for opportunities outside of their home country. That's a big driver as well. So to navigate the geopolitical evolution of things is very challenging. There is no simple answer, but I would say it drives a lot of the flow. And the fact that I see investors from South America actively looking for investment opportunities in North America and Europe, Africa, and vice versa, and also between the countries within those regions. Now investors are actively looking at making acquisitions and expansion in new economies. Why? because they want to hedge the risk. At the end of the day, what you want to do, you want a portfolio, right? It's portfolio management 101. Really, you don't want all your eggs in one basket. And the geopolitical situation is so volatile these days that investors need to diversify, need to have parts of their assets in different places. And if things go bad in one, well, at least not everything is there, and they can always move it. But it takes time. It's sticky, right? You make an investment, it's for the long haul. You don't just move your money out immediately unless it's a liquid asset.
Yeah.
Usually is not.
LJ, just wearing my lawyer hat, right? So what we're seeing in the trend lines over the past 25 years, how structured all the arbitration clauses and so on and so forth, we're actually seeing investors, especially the capital pool that's going into certain countries, asking those representative companies for that investment opportunity to establish a foothold in the U.S. Right. So the investment is going from U.S. to U.S. and let them take their funds over. And so it's almost like a, intra-company transfer. So have you seen any of that? Do you see those trend lines? Because it's kind of interesting.
You just have to drive Brickell Avenue in Miami, and you will see exactly to your point. That's exactly what's going on. And compare Brickell Avenue today with Brickell Avenue 25, 30 years ago, it's a completely different environment. And that's exactly what you're talking about here. You do need to have a foothold in the US being the largest market. And also, the other thing that's really important here, and you're the expert on this, but I would say the international treaties are really a big driving force to determine the optimal structuring of those deals. For example, certain countries adhere to those international investment protection treaties, but others do not. And therefore, I've seen structures go through the UK, Luxembourg, to go back into a Central American country because the investor did not, the home country of the investor did not could not take advantage of those treaties unless it went through an EU country, in this case, Luxembourg, which is a great place to do that. So what I'm saying is that those considerations are really important. And why is that important? Because investors are afraid that governments will not respect the rule of law and will somehow either seize the assets or change the rules, which will affect the value of those assets.
I totally agree with those points, LJ. I see that in practice. So Ed, back to you. This is going to hit home for our IB students. How can our students in the IB program prepare for the challenges and opportunities in these global private markets? Is there, how do you, if this is your teenage son, what would you guide them on?
Yeah, the first way is exactly what we're doing today, and having forums and discussions, thanks to the incredible efforts of the people at the University of Texas McCombs School of Business, where these topics are discussed and where there's a free flow of information and ideas. So you're already doing the right thing by participating in this panel. The second way is to leverage the vast amount of resource and information, both at the university, but equally in the broader networks afforded you as a student in this program. Get to know practitioners of global business and just take time, whether through mentorship or through direct contacts on LinkedIn or whatever personal means of networking that you can do, not just reading what you see on social networking or in Instagram or in Twitter. Get to know someone personally who can give you as broad a sense of where the opportunities are and where jobs that will pay you well and hopefully give you a good future into the world of international business are being created. We've sort of bubbled up a number of those ideas, but the best way for you to leverage what you have right in front of you is to get some networking done on a face-to-face personalized basis. That's my most valuable advice to you. I've done that myself, and it has served me incredibly well over the course of my multi-decade career.
I would add, seize the opportunities, because this is, get on a plane, don't hesitate, go on the ground, see what's going on in those markets that you're interested in. I think that would be, in my case, that was absolutely pivotal, right? When I was 24, I had the opportunity to be an expatriate, and that changed my life, and it changed the rest of my career. It oriented it towards something I really enjoyed doing, and I've been passionate about this since then.
Yeah. Did you add to that?
Raj, just dawned on me, a couple of practical areas.
Mm.
I think clean energy is going to be a very big topic for global companies and local companies, right? And local practitioners. In Europe, for instance, by 2030, and I was working on a deal with an EV truck company, you will no longer see a diesel truck delivering your Amazon package in Paris by 2030. And believe it or not, the US doesn't have leadership in this area. We will follow the rest of the world, largely by technical and technological innovation, but also whatever your stance on climate change is. And hopefully you guys have a commonsensical view of climate change. The world is moving in this direction, and soon diesel trucks will be phased out. That's one area. And of course, AI and technology is being globalized. And there's a fierce competition underway, and I think there will be tremendous opportunities there as well.
Let me just add to this. Take risks. You guys are young. You got the whole life in front of you. Don't be afraid of taking risks. If it doesn't work out, you'll at least learn from the risks you took. So take risks. You're young enough to make the mistakes and rebound from that. Don't forget that. We have a couple quick more questions. We'll try to wrap this up by 7:20. Or sorry, it's 6:20 for you guys. And then maybe have a quick Q&A. Back to you, LJ, real quick. What do you think are the best practices for collaborating with local governments and the private stakeholders in Latin America to ensure the infrastructure investment both meet the investor goals and the community needs? Can you elaborate on that?
Sure. I would say that what we mentioned before, having a local partner is really important to understand how this works. Don't try to do this yourself without having a local partner, unless you have a deep knowledge of how the country operates. That is something that I have seen over and over, where foreign investors and companies believe that they don't, they can do it, and they will assume that things are the same than what they are in their own countries. I've seen that mistake over and over. You'd be surprised. It seems to be obvious, but you do need to have a local understanding and a partnership with someone who is really understand what's going on. The example is in Brazil. I was on a board of a gas pipeline a few years ago, and basically we had a French partner, right? And I was representing a Canadian pension fund. And so a lot of the work was to manage the political structure in Brasilia. So you had some people, and you didn't have ideally you wouldn't have anyone from Canada or from France or from the US do this work. You need to have, Brazilians who would understand how this worked, and they would fly into Brasilia back and forth from Rio all the time. It was on a weekly basis, those meetings. That was very important. Why? Because you need to have people who understand how to deal with those things. And I would say the same for the US and for any country in the world. And so I would say that's really key. And also never assume that things will remain the same forever. You always need to be prepared for changes in regulatory environments. We've seen that.
That's so key, LJ, what you just stated. It's so important about having that ability to understand that. Ed, I want to end this with the question to you, and this is right about can you share one of your experiences of making private investments, some of the challenges that you confronted, and what you learned from that?
Yeah, real quickly, I was a partner at a private equity hedge fund in the early 2000s. And for those of us who were doing deals back then, the big trade was the urbanization of China. and everything that helped China urbanize, whether it was steel and iron ore, whether it was copper, whether it was housing materials, those all went up dramatically, both at the company level, but equally the commodity prices of those underlying commodities. What we did was analyze that as China urbanized, as these countries like China go from an agrarian and very poor, per capita income, people eat better and eat more, right? They go from eating one meal to two meals, and like us overfed Americans, maybe eventually they have three meals. Well, what does that do when you have 1.4 billion people doing that? Food demand increases dramatically. So what we did was buy farms around the world. We bought the production means for soybeans and corn and wheat, and we bought it in size. We bought upwards of $1 billion of farms in countries like Brazil, Uruguay, Argentina, Poland, the Czech Republic, Australia, Africa, because the marginal production is where price discovery occurs, right? It's not the most efficient producer that sets the price, it's the least efficient. So we expected prices to increase. I think that has been a very hot topic in politics today. Food prices are increasing dramatically. Two reasons. One, Russia and Ukraine are out of production. They provide fertilizer and wheat and corn to the rest of the world. And two, demand around the world is increasing. So we bought farms around the world. And then the final chapter of that was I tried to sell those farms to some folks in the People's Republic of China. I got very close and was shuttling back and forth from Washington, New York, and Beijing about once a month, talking to the Chinese government, the Chinese Sovereign Wealth Fund, the Chinese Soybean Institution, and so forth. A fascinating period of my career. I never would have imagined it when I was studying computer science at Columbia. But as Raj said, see where your career goes. You might be buying farms in South America and trying to sell it at some point.
Love it. So thank you, Ed and LJ. We have these students are, as I told you, when we were prepping for this, they're wonderful. They have a bunch of questions. It's going to be a rapid fire, and we're just going to go back and forth. And if you can limit your answers to maybe a minute, I'm going to try to get to as many as I can. So I apologize, students, if I don't get to you, but I'm going to do my best. First student, how can investors navigate the challenges of global markets and shifting regulations as the U.S. loses its dominance and capital flows more into emerging economies like Asia and Latin America?
Well, as we mentioned before, I think that diversifying is a key strategy here, and hedging your risks, right? I mean, making sure that your portfolio is across different countries.
So that's not one region. You're diversifying potentially. Okay.
So I would say that's the best strategy for that.
The 10 best years for non-U.S. investments were when the dollar was weakening.
Right. That makes sense.
The 10 best years for U.S. dollar investments was when the dollar was strengthening.
Yeah.
So keep track of currency movements, keep track of central bank movements.
Right.
And as we've been saying, the pockets of opportunity around the world where growth is occurring, where they're making more babies.
Yeah.
Thank you. Another question here. A student was wondering how you can give a perspective on what would happen to the global market if the future we're able to find and create a green energy source that outsources the need for oil. Anyone tack on that?
I'm sorry, I didn't get the question exactly.
Your perspective on what would happen to the global market if in the future we are able to find and create green energy sources that outsources the need for oil.
Yeah.
Shifting from the carbon dependency.
Yeah, I mean, look, these are technologies that evolve over time. There are a number of initiatives right now, whether it's hydrogen, there's a big discussion going on around nuclear energy right now. So there's a lot going on, and there's a lot more also that is just starting, and that will eventually, I think, be a very reliable source of energy. But in general, the rule is if a country has a certain average demand, or let's say a needs, let's say 90 gigawatts, for example, of energy, you need to have the capacity for much more than that. So if you have traditional sources of energy that are reliable 24/7, well, you probably need 50% more than that total, this demand number. However, if you go to more volatile sources such as wind and solar, which are not 24/7, you need to double that. So you need a lot more investments for those types of energy. So
Great.
I think that the technology will evolve, but we have to be mindful that you cannot put in jeopardy the economic security and national security of the countries where you implement those technologies. So it's going to take a lot of time. I think oil is going to be around for a while.
Great answer. Yeah, thank you, LJ. Ed, to you real quick. How much does the law, political structure of a country affect your decision to invest?
Greatly. As at Arena, we like to say there are about 70 countries in the world where you can settle commercial and financial disputes in a civilized way, and we avoid countries where contract disputes are settled by violence. So that is a key fundamental, must-have before you go into any country and make a deal. You want to make sure that those four major platforms and foundations of accounting, bankruptcy, commercial code, and rule of law are in place. And thank goodness most of the West, most of the Americas, and a good part of Asia, Australia have plenty of opportunities where those rules are respected.
No, thank you. So moving on, we touched upon the geopolitical environment in China. Can you compare and contrast that with what's going on with India? If you can give a 30-second answer to a minute, both of you. Your quick thoughts.
You're the expert on this.
Yeah, I think China remains a dominant force in terms of global markets, both in terms of its domestic market and the consumption that goes on there, and the size of its financial markets and its influence in financial markets. I think India, better than I, is in an early stage of loosening its capital controls. I wish India could clean up some of its corruption and some of its, it's kind of civic corruption. I think India holds a lot of promise. India also needs a tremendous amount of infrastructure. You could argue China has overbuilt its infrastructure, where the opposite holds true in India. And I think that is an opportunity and some promise there as well.
I would add to that China has shifted a lot, not only building its own infrastructure, but investing everywhere in the world. So that's a really key change compared with a few years ago. The amount of Chinese presence everywhere is just Africa and South America are a key example of that.
So let me combine a couple of questions real quick for LJ. So if you don't have, you have a company does not have a foreign, going to a foreign market, they don't have a local country partner, and or they're not partnering with local companies, how do you get around this? Or is that not possible? Is there other strategies to look into?
Well, before, back in the days, they would send a bunch of expats, right?
Right.
That was the strategy. Now, I think the only way is to make sure you have people who understand. It's not a matter of, you're a citizen of that country, but how well do you understand the intricacies of how it works really in reality, not just in theory. So I would say it's, study a lot and spend a lot of hours understanding what's going on. There's no magic here. You need to do the homework.
Great. It's just I'm skipping around some, we have so many, and I apologize if I'm going to try to, some of it, they're being doubled up, some of similar questions, so I apologize if I don't ask your specific question, but there's a couple that I really like to get to. One was, what one professional risk that you thought about taking and did not go for it? Did you regret taking that today? I think this is so apropos for these students. So really quick, both of you.
I was very close to moving to Beijing. The Chinese government, in the deal we were about to strike, said, if we buy your company, you're coming with it. And I think that would have been an invaluable experience for me to have lived there, seen it firsthand, what's going on, and being the US partner to a Chinese investment. I probably should have done that.
I've basically done everything, that basically, and so it's sometimes with great results, and sometimes you learn from mistakes. But I've never shied away from taking risks.
Thank you. Last question, because I know we have a hard stop at 6:30 your time. The last question is, this is interesting. How does the upcoming election affect U.S. dominance in the global market? I know this could be loaded, but just we don't have to get party specific, but any just overall thoughts?
You take that.
Putting aside all the bluster, neither party has that big a difference. Both want to impose tariffs. Both are going to run incredibly high deficits, devaluing the dollar long term. Those are the big drivers, right, of the U.S. place in the global economy. The one stat I find absolutely staggering is, despite all of our bad policies and bad decisions, we are still the reserve currency of the world. Post-World War II, that was what was decided, and today we're still the reserve currency of the world. 50 to 60% of all transactions in the world are settled by the US dollar. If we screw that up, then it's going to be a much different situation around the world. So what was glaringly absent yesterday was any discussion about US economic policy, and there was a lot of discussion about name calling and size of rallies, unfortunately.
LJ, any thoughts?
Couldn't agree more.
Yeah, you're Canadian. Doesn't matter to you anyway. You just probably just there. Never mind. I'll take that offline. No. So we have to end this, but I want to personally thank LJ and Ed. They are on the advisory board for the Center for Global Business. They've been a valuable asset to our board. Before I forget, I want to also thank Deborah to making this happen, along with Nafisa and Melissa, and we can't thank our director at the Center for Global Business, Professor Deidre Mendez. She is a force to be reckoned with for the center. And I want to thank the students. You guys are wonderful. There's just so many questions that we can get to. And I apologize. Maybe I'll learn from this. Next panel I moderate, I'll allocate maybe more time. So thank you. Have a good semester and have a good evening. Bye-bye.